So there's a couple really great reasons to do an annual mortgage review, even in a period that we're in right now in 2024 with higher rates. And really and it may save you thousands of dollars over the course of your mortgage. So guys, remember right now, there has never been more equity in homes across the country for homeowners. We've never seen in any other period more equity in houses. So what we are seeing now is folks that have bought homes in the last, say, prior to 2 years from now, definitely are starting to get rid of the mortgage insurance, but a lot of people either don't realize it or they forget about it. So guys, here's what you've got to remember. We have got a great rate, and you don't want to have to refinance at the moment, especially if you don't plan on moving. You don't want to have to refi to get rid of your mortgage insurance. So let's talk a little bit about how you don't have to refi to get rid of your private mortgage insurance. So many of the home loans that I've done over the past several years, a lot of folks have been putting minimal down, let's just say around 5%, 5 or 10%. And the reason they're putting less down is so they can do renovations on the property, and also they don't have to be contingent on selling their current property. So what is happening, guys, is we're getting folks that have bought these properties, done extensive renovation, and are increasing the value of the property from what they paid for it. So you can also remove the mortgage insurance from your loan without refinancing, but there are some wait periods. So based on the current value of the property, or based on what you pay for the property, there is a 2-year wait on single family residences. So definitely, if you have not made substantial improvements to your property and you haven't paid down the principal significantly, you will have a 2-year wait period to have that removed. Now, if you have paid down the principal significantly, once you get to a 78% loan to value, based on what you paid for the property, the mortgage insurance automatically has to fall off. So many of you have bought a home, put minimal down, sold another home, and when you recast it or paid down the principal, double check and make sure that your mortgage company has removed the private mortgage insurance based on your current loan to value of the principal and what you paid for the house. So some of you may be thinking, I'm not even sure if I'm paying private mortgage insurance. So a couple ways that you can tell, guys. Number one, the best way to look is at your current statement. It may not be right in the payment section, but if you go to the middle of the bottom of the statement, if you're paying private mortgage insurance, it will definitely be listed how much you're paying per month. Another great way to do that is to go back to your closing disclosure from when you purchased the property. If you don't have it, I bet your loan officer does. You can go back and look and see how much you're paying for private mortgage insurance. And I'm going to show you guys where on your closing disclosure that the mortgage insurance is, and we'll talk a little bit more about removing it. So I wanted to take just a second and show you a closing disclosure now that you've all gone back and grabbed yours, and show you where the mortgage insurance is and point out a couple things. So guys, in this scenario here, we have a buyer that is paying $58.28 a month in mortgage insurance based on their down payment. So what I would say, guys, is let's take a look right here. That potentially, if you don't monitor that, you could pay that for up to 10 years based on the value of the property and the amortization schedule to get to an 80% loan to value. Now, with homes increasing in value and a lot of folks paying down the principal, you can get to that 78 to 80% value much quicker than 120 months, guys. So if you're not sure, get with your loan officer, get with your realtor, get a current value on your home, and definitely determine the next step in removing the mortgage insurance on your loan. It just might save you hundreds of thousands of dollars over the next few years. So a couple things to remember, guys. We're talking about conventional mortgages only. If you go back, the next most popular loan in the country is FHA. If you go back and you look at FHA, if you just put 3.5% down, the mortgage insurance on that loan can never be removed for the life of the mortgage. So that mortgage insurance payment is there forever, or until you sell that home or refinance that home. If you put down more than 5% on that FHA mortgage, your mortgage insurance will be on there for a minimum of 11 years. So that FHA mortgage, it's going to be either impossible or a little bit longer to remove it without actually doing a full refinance. So doing an annual mortgage checkup can definitely save you some money. I would highly encourage you to reach out to your loan officer and talk to them about, hey, how can I get this mortgage insurance removed? It may be anywhere from $70 a month. I've seen up to $300 a month of savings by removing the mortgage insurance. So guys, reach out. If we can help you, please let us know and check up on your mortgage insurance. You may be paying additional monthly payments that you don't have to.
This video was produced by Visionary Masterminds.